Hi all, this is Michael here with Steward and Grow Real Estate, and this is the first video in a 5-part series entitled 5 Principles for the Passive Investor. Now, if you have any questions, if you have anything that you want to reach out to me about, go to the website, it's stewardandgrow.com, book a call, let's chat about it. So, without further ado, what are the 5 principles for the passive investor? The very first principle is number 1, retain a long-term perspective. This is a long-term game, it's not something that happens today. It's not something that happens tomorrow. It takes time. So number 1, retain a long-term perspective. Number 2, understand how investments snowball over time. Okay, that's gonna be the second video. Number 3, understand the multifamily business model. It takes time to do these things, but you also have to understand how the model works, how all the mechanics and gears work together. So understand the multifamily business model. Number 4, understand the market. Which market are you investing in, and what are the features in that market, and what are the market fundamentals that make it a profitable or good soil for your investment? And number 5, and this is maybe the most important, is have a relationship with the sponsorship team. If you don't have a relationship with somebody, how can you trust them? So we're gonna start with the very first one, and that's retaining a long-term perspective. Real estate is a get rich slow approach. This isn't like 2021, you invest $1,000 in Dogecoin and within a couple of months it goes to the moon. This is very different. If that's what you're looking for, I'm not your guy. What we do is slow, steady, sound investments that pay over time. I like to say that real estate is akin to starting a farm. At first, it's a lot of work. After a long time, and in due season, those seeds do start to spring up and do bear fruit. And real estate works in the exact same way. Building a thriving real estate portfolio requires time, consistency, focused, calculated investments that all stack atop one another and grow over time. And this is the investment snowball that we're going to talk about in the next video. Each investment pays back the investor in the form of 4 different ways: cash flow, equity growth, tax sheltering, and debt paydown. And in order to grow a real estate portfolio, investments need to be stacked over time and held for the long term in order to maximize their tax efficiency and leverage. So the longer you hold, the more profitable an investment becomes, both from an appreciation perspective and then also from a debt perspective, because the tenants are paying down the debt at a fixed rate. The point that I want to make here is that a profitable portfolio requires multiple assets and time to grow. So the critical question a passive investor needs to reflect upon is, do I want to invest for the long haul? And before you answer that question, look at some of the benefits and drawbacks to making that decision. First, let's talk about the benefits, since we already sort of talked about it. The first one is cash flow, equity growth, tax sheltering, and debt paydown. That's what we just talked about. But let's talk about some of the other benefits. Your cash is being put to work instead of eroding due to inflation. Your cash is working for you, okay? And then also, passive investments are truly passive and require very little effort. So on the part of a passive investor, he or she is not putting the time, energy, work into sourcing the deal, funding the deal, putting the players in place. It's a truly passive investment, so that's one of the benefits. Now let's look at some of the drawbacks of investing for the long haul. Number 1, real estate is illiquid, meaning you can't draw out your capital on demand. Okay, so it's not like point, click, invest in this stock, invest in this bond, and you can draw your money out whenever. It's illiquid. Number 2, there is inherent risk with any investment. So it's not the same as if your money's just sitting in the bank. If your money's just sitting there, yeah, it's not being put to work. Yeah, it's losing value due to inflation, but it's also not doing anything, and it's safe as long as the bank doesn't go under. Number 3, it requires a pre-existing relationship with the deal sponsor. Like I said earlier, unlike stocks or bonds, it has a higher barrier to entry. You have to vet the sponsor. You have to understand and have a relationship with the sponsor. And some investments, some real estate investments, like a 506c offering, requires investors to be accredited. So there's a higher barrier to entry when you're looking at these types of investments. So the passive investor needs to take personal and financial inventory before setting out to build a real estate portfolio. Understand that this is going to take time. It's going to take years to build sustainable wealth, and you won't be able to pull out your investment whenever you feel like it. And it's important to square up with that before you jump in. Personally, when an investor approaches me, I've had this asked of me before, can I sell my shares early in the hold rather than hanging on to it if I need my capital back? The answer to that is yes, there are ways to do that, but why would you put yourself in that situation? Just wait until you're ready to do this the right way so you can fully realize all the benefits, the tax benefits, the loan paid down, the cash flow, the equity growth, all the beautiful things in real estate, all the levers. Wait till you can hold for the long term so you can actually realize all those benefits. Because if you sell early, you're just going to lose money. It's not going to be valuable for you, and you're going to get turned off to real estate. So, you've taken time, you've taken personal and financial inventory, and you want to learn more. Well, in the next video, we take a deeper dive into long-term thinking as we discuss the investment snowball. This next principle is the catalyst to building a sustainable real estate investment portfolio. So I hope you've learned something today. If you want to learn more, visit the website stewardandgrow.com. Book a call with me. My name is Michael. I'd love to talk with you about that and learn about who you are, what you're trying to do, and if we can help with that. Thanks for watching, and until next time, go faithfully steward and grow all that's been entrusted to you. God bless. Take care.